Now students, here the owner is bringing in cash and stock. So what will be the effect of these two entries? Now let's see, he is bringing in cash. Cash is an asset for the business. So under asset column, we'll create a sub column of cash and add 2 lakh rupees here. Owner is also bringing in stock. That means under asset column, another sub column of stock, that is for rupees 1 lakh. Now in total, he is bringing 2 lakh plus 1 lakh, that is rupees 3 lakh. This 3 lakh should be entered into his capital, since this is the amount brought in by the owner. So this completes the double effect, and the total is rupees 3 lakh on both the sides. Coming to the second transaction, sold goods worth rupees 20,000 for 30,000 on credit. Now students, here goods worth rupees 20,000 are being sold for rupees 30,000. That means there is a profit of rupees 10,000. And second part to be considered here is that they are being sold on credit. So now let us understand how we will deal with this. First of all, goods worth rupees 20,000 are being sold. That means goods worth rupees 20,000 are going out of the business. So deduct 20,000 rupees from the stock that we were holding. Now this 20,000 has now been deducted. They have been sold on credit. Credit means the amount has not yet been received. Since the amount has not yet been received, it cannot be entered into the cash account. So that means this amount is still receivable. Now students, debtors are the individuals from whom we have to receive money. So that means this amount of rupees 30,000 should be credited or should be entered in the column of debtors. And debtors are our assets, so it is a sub column under the category of assets. Students, in this transaction, the particular person or the owner has made a profit of rupees 10,000. So this 10,000 profit belongs to the owner, so should be added to the capital. Now once these are complete, let us find the new equation. We have cash of rupees 2 lakh. We have stock of rupees 80,000. Debtors are worth rupees 30,000 and capital is of rupees 3 lakh 10,000, and the total on both the sides is same. Coming to the third transaction, received from debtor on account rupees 20,000. Now received from debtor. Received means we have received something in cash. That means we are receiving cash of rupees 20,000. So let us add this 20,000 into the already existing cash of rupees 2 lakh rupees. So 20,000 is now added here. This cash we have received from debtors. That means debtor who had to pay us 30,000 rupees earlier will now be reduced by 20,000 that he has paid. So the double effect is reduce the debtors by 20,000 and we have received cash, so add 20,000 rupees to cash. Let us find the total, and our new equation becomes 2,20,000 cash, stock worth rupees 80,000, debtors are now worth rupees 10,000 and capital 3,10,000, and the total on both the sides is rupees 3,10,000. Coming to the last transaction, rent outstanding. Now students, it is rent outstanding. Rent outstanding means the expense on account of rent has been incurred but has not yet been paid. Since this amount has not yet been paid, we cannot deduct it from cash. So what to do now? First of all, it is an expense. Let us deduct it from capital, since the owner has to bear all the expenses. The second aspect would be, since this amount has not yet been paid and it is payable, so it becomes our liability and should be added under the column of liabilities as a subheading of rent outstanding. OS stands for outstanding. So now both the effects are shown. It is an expense, so deducted out of capital, and since it has not yet been paid, it is a liability. Let us total it out and check our new equation. 2,20,000 rupees cash, stock worth rupees 80,000, debtors are 10,000, capital is now 3 lakhs, and rent outstanding is 10,000, and we can verify that the total on both the sides is rupees 3 lakh 10,000.